Welcome to Freed on Business. He grew up in South Florida, has been in business here since the early 90s, and has closed over $3 billion in deals. He's seen it all. He always has an opinion, and he's always ready to share it. Informed, entertaining, and connected, he has his finger on the pulse of South Florida's business community. He's Jim Freed, and this is Freed on Business.
Well, we've got a great show for you today. People are always telling me that there's all kinds of opportunities in the CMBS world for buying notes and mortgages, all kinds of things like maturity defaults. And I really wanted to talk to a friend of mine that's an expert in that space. He does a lot of restructuring of CMBS and other types of loans. I met him when he was probably one of the biggest originators in the country. Michael Cohen from Brighton Capital Advisors. He's going to be on today. Would like to welcome to the show. I want to remind everybody that we're streaming live on LinkedIn, YouTube, Facebook, Twitch, and Instagram. You can look for us at Freed on Business and at Jim Freed. And as I said, today's guest is Michael Cohen of Brighton Capital Advisors. I want to thank our sponsor for the last 15 plus years, Warren Henry. I want to thank Ismet, Larry, Eric, all of our friends at Warren Henry Automotive. Great cars, great people, exactly what you want when you're looking for transportation. And now back to today's show and today's guest, Miami Podcast Studios. Can you bring on Michael Cohen? There he is.
How you doing?
I'm doing great. How about you?
I'm feeling good.
I really do appreciate your coming on. I know that you and your team survey the CMBS market and other debt markets. Tell us a little bit about what your firm does, your big restructuring firm, and what you're seeing as opportunities today in the marketplace.
Yeah, I've been a CMBS lender. I was a CMBS lender for 30 years. Started back in the very beginning when we started Collin Financial. We started Wells Fargo, or First Union's program. We started when we were trying to take RTC loans and securitize them. And along the way, worked with teams to really create the industry. And what I really learned from that is I'm a dirt guy. I understand the real estate. I understand how borrowers functioned. I worked for an owner-operator during the Great Recession. And I really learned along the way about CMBS. My career spanned, as I said, I started out at DLJ, moved down to Charlotte 28 years ago. That's where we're headquartered. I then ended up working for Deutsche Bank, UBS, and Citigroup as the head of the Southeast. And I recall going back in times like this, I was working, I got back after the Great Recession to UBS, and it was January 2012, and I came down, and I was covering the Southeast, and I remember coming down to Miami and talking to the guys at Aztec and the guys at my friend Mitch Simberg and Fischini, and talking to all the guys that I know, and Saul Hoppenstein and everybody I knew, and said, look, I have a credit card. You haven't had a stake in a long time, and I have money now. And I can help you guys get out of the borrowers get out of this. And so we went down, and as head of the Southeast region, I was able to kind of really, get everybody's attention at the bank. And we started doing loans, and we started taking and helping people get out of problems. The National Hotel, the Lincoln Road properties, properties in Delray, in Orlando, places where they really got stuck in CMBS. And so I started doing all these loans, having a good time. I really like that part. I like the part where there's no rules because people really need the help. 5 years ago in 2020, I left Citigroup because I just didn't feel like it was going to be a productive thing for me to sit there, because I knew that some people needed help. And I started calling my borrowers and saying, hey, I'm leaving. They said, hey, can you help us? So I started this business to help borrowers navigate through CMBS servicing and special servicing. It's not logical how it works. There's a lot of rules to it, a lot of tax rules, a lot of investor rules. And honestly, there's no relationship because this is a trade. Your loan got sold into these people. And these investors are not your friends. And they will take your money and they will take your property. So I realized that if I could build a team with my experience, I brought on a guy that had worked internally as a senior closer at Bank of America. Before that, he worked for external law firms, a New York Retirement Common Fund. He's a geologist, smart guy. Then knew the ins and outs of the legal side. Doesn't practice now, but we know everything about CMBS. In fact, he worked as the co-head of large loan special servicing at when B of A and Merrill Lynch were combined. And I brought in a woman that spent 20 years as a CMBS special servicer at Wells Fargo. So what are we doing? We're recreating what's happening on the other side. So when we go in and represent the borrower, they have to talk to us and we know what they're saying and we know what they can and can't do. So we're really putting the bar on their best foot, and it really makes me feel good. So kind of like what I was doing before.
So Michael, who is it that would call you? Is it the borrower? I'm sure that there's a lot of, I'll call them, I'm going to make some air quotes here, debt funds, predatory investors. Who's really the person that can come in here and bring the missing piece that helps people solve problems?
So that's really what I'm focused really on the borrowers. I'm talking to the first two questions. I work with borrowers and their counsel, because if the counsel gets on the phone, the bank's going to put on the counsel. So what I do is I ask the borrowers two questions every single time. Do you want to keep your building? And do you have money to invest in your building if we do it? Because what we're doing, Jim, is we're going to put together the full package, and it can only be 5 or 6 pages, but it's the content of what the servicer, the master servicer, the special servicer, and the controlling class holder get into all these different people that make up the decision. But we put together a proposal that pre-negotiates the workout, but incorporates all of the sponsor's needs into that proposal. So if you wait until you get into special servicing, which is, we strongly suggest you don't do that. In CMBS 1.0, you did it because you couldn't get anybody's attention. Now we're trying to keep you out of that because it takes away your ability to negotiate. We'll get into that later. But what you really want to do is you want to go and you want to put everything on the table that you need in that proposal. And then we tend to get better outcomes. And those are we get those when people come to us early, before the maturity of fall.
So Michael, it seems to me, from what I understand about the CMBS market, that there's all different layers of investors in the bonds that are behind them. They all have divergent interests. Some are more flexible than others because they have less to lose, more to lose, whatever. So what is it that really is attractive to the borrowers? Is it I call it a cash in refinance where they need new money? Are they really looking for just to release liabilities? They have high interest rates. They have low interest rates. There's all kinds of things going on. What's the biggest opportunity today in the marketplace?
So, well, the opportunity, and I'm not going to talk, and there's a lot of, I would say everybody's looking for an opportunity as an investor as to where they can find these loans, and they can find them on the cheap and they can buy them. But that's when I say the loan has gone past the current ownership. I'm working with the current owner right now on trying to retain their loan and to avoid them having recourse carve-out risk. So here's an example. You have a borrower that has a loan and it still has equity in it. And today it's an office building. Maybe it lost a tenant. Maybe the comps have a higher cap rate because of the interest rate environment. And your loan's coming due. And you can't find a replacement loan for it because of the occupancy, something's going on. Well, if there's equity in it, the CMBS special servicers are the lowest, are the decision makers here. And if they see equity in it, they have no problem trying to take your loan because they'll foreclose. Because if they foreclose, they get to liquidate. And then once they liquidate, they get all their fees first before the rest of the money goes back to the funds. The thing about CMBS, it's a little like a pawn shop. You went in there, you got your money, and now you follow the rules and you close and you pay back, no problem. But if you have to go back and renegotiate, well, there's a pooling and servicing agreement that was made after your loan was closed. What does that mean? When your loan was closed, it got into a pool. When you went into the pool, the servicing and the bottom piece of the waterfall, that's how the loans are made from the investors, the lowest guy on the platform, and you sold the servicing strip to somebody, master servicing and special servicing. Master servicers are the administrators, special servicers are the ones that are the ones that make decisions on making changes to the loans. Well, one, you didn't know who that was going to be. Was it going to be Rialto? Was it going to be LNR? Was it going to be KKR? You don't know. Second is, there's a pooling and servicing agreement which outlines what the fees that these guys can collect. So when they say, hey, well, you're getting transferred into special servicing and that's costing you 25 basis points per year divided by 12 months, you're like, I didn't know I had that. Or they charge you an exit fee, a liquidation fee, or a modification fee of 1% of your loan amount. Like, I didn't know that. So certain things you didn't know because they were done after your loan was closed. So what we know, because my folks have worked in this industry for the last 25 years, and we know the people and the decision makers, we know what to tell you to expect when you go into that scenario. So when you're a borrower and you want to keep your loan, you have to go back and you have to put it together.
So, Michael, we're going to take a quick break. And then when we come back, I really like it if we could talk just for a couple seconds about what it is you bring to the table and what problems you solve. Because the most important thing here is the problem you solve and who you solve them for. I want to thank, before we go any further, I want to thank Sarah Berman and Talia from the Berman Group for putting us all together here. And now we're going to throw it back to our producers at the Miami Podcast Studios. Miami Podcast Studios will be right back with the big takeaway with Michael Cohen and Brighton Capital Advisors. Take it away for the break. All right, we've got a great show for you today. We're talking about the CMBS marketplace and what's going on there in today's world. I want to thank our sponsors for the last 15 years, Warren Henry Automotive. I want to thank Larry, Eric, Warren, Ismet, the whole team at Warren Henry Automotive. I want to remind everybody they treat you like family. Whenever you're looking to buy or lease a car, you want to get every advantage that you can. That's why you have to check out Warren Henry, Land Rover, Range Rover, Jaguar, Lincoln. That's at 151st and Biscayne, their flagship store. Up in Gainesville, they sell Audis. Down in the Keys, they've got a great store that sells all the great nameplates. Of course, they've got their award-winning stores in South Dade and West Broward, Land Rover, Range Rover. Join me, my wife, my beautiful wife, Vivian, my mom, my clients, lots and lots of my friends. We're all members of the Warren Henry family. We get the Warren Henry Advantage, which includes great things, including loaner car when you buy your car and all kinds of other great add-ons. Go to warrenhenryauto.com to learn more today. And remember, when you're looking to buy or lease a car, Get that advantage from Warren Henry. Always the best price, always the best service, always Warren Henry.
Welcome back to Freed on Business. Connect with us on LinkedIn, YouTube, Facebook, and Twitter at Jim Freed or at Freed on Business, and on Instagram at Jim Freed1. Now, back to your host, Jim Freed.
I want to remind everybody to reach out to me at Sandstone Realty Advisors. We help families from across the globe solve their real estate problems. I also work with private equity investors across the globe to buy companies. We help our clients get construction financing, permanent financing, bridge financing. One of my favorite lenders of all time is our guest today, Michael Cohen, with the founder of Brighton Capital Advisors. And we're going to get to the bottom line right now. Michael, what do you guys really do? Do you do restructuring? Do you do modifications? The problems you solve and the people you solve them for?
We do. We work on modifications, loan extensions, discounted payoffs. We also work on administrative issues where your loan is, these are all CMBS or CLO, and where you have reserves that are stuck in an account. Places where you're trying to talk to, we navigate through the complexities of the CMBS servicing, and when we're on the phone with the servicers, they know that we mean business. So I'm going to give you a great example. There's a Walmart anchored shopping center in Fontainebleau area, and the borrowers are fighting and they're fighting with the lender, and they built up a $15 million default interest penalty on that asset. We had an investor in the area that wanted to buy that and assume the loan. The servicer said, no problem, you can assume it, pay us the $15 million. For 6 months, they tried. Within 90 days after getting us on the deal, we got the loan assumed, we cleaned up everything, we got the default interest waived, and we got it done in time for a 1031 exchange. So we know the process, we know the people, and we understand it. And look, all these properties are going to need equity. So the best way to do it is to, if you're an investor, is to look at these properties through the eyes of the borrower, figure out which loans have CMBS, which loans we can work with the current owner to communicate with the special servicer, and maybe do a loan assumption, maybe do a discounted payoff, maybe do something. But right now, Jim, the greatest thing, there's no programmatic solution to this. So you need a bespoke advisor like Brighton Capital Advisors. We're based in Charlotte. We've covered the Southeast. We know everybody. I'd say we're generally good people straight up, and we're success fee oriented. We do not take all the money up front and say, see you later. We work through until you get your solution and find the optimal solution, and that's how we get our fees.
Well, it sounds to me like what you do is you align yourself with the people involved in the transaction, and you make sure that everybody comes together and gets an effective, efficient solution. And you do this. You said in the Southeast, but you could do this nationally.
We do this everywhere. No, we're working on. We've done everything from a $15 million loan in Lexington, Kentucky, to we're working on 2 million square feet, 2 towers in downtown Chicago. We've got we're across the country, so we're really trying to help the special servicers like us, because they know when we're on this deal that the borrowers know what they can't do, but the borrowers also know that they're going to get the best outcome. And we are indifferent to where it is. It's as long as the borrower is willing to cooperate and help them understand, we can get them a great solution.
Michael Cohen, expert, actually trailblazer in the CMBS industry, right up there with Ethan Penner and the rest of them there at the very
a lot
beginning.
younger and smaller roles there, but along the way, learned a lot of lessons. And you know what? If we can give back by helping the people out, the good news is none of my borrowers are calling me. It's unfortunate, but I think I gave them enough exit strategies. But we understand this inside and out, and we're happy to help.
Michael, how do people get a hold of you?
You go on you can easily go on my website to Brighton, Brighton, capitaladvisors.com. We post a tremendous amount on LinkedIn. If you follow us, our homepage, we do put in a lot of thoughtful insights into the trends in the marketplace. Just to note, there's just to give you a magnitude of what's going on. In the fourth quarter of this year, there's going to be $150 billion approximately of CMBS loans maturing. The rating agencies predict about 50% of them will find a home. 80% of those loans have coupons at 5% or less, with a debt service coverage of 150 or less, meaning they're going to have to put in a cash refi. And to answer your question before, Jim, you don't put good money in after bad. But if you can get the loan restructured and you can make it work for you and work for the lender, it's all good. I
want to thank you today for being on the show. Michael Cohen, founder of Brighton Capital Advisors. I want to thank our friends at the Berman Group, Sarah Berman and Talia, for putting us all together. Michael, I hope you'll stick with us in the green room so we can talk afterwards. Michael Cohen, expert at restructuring CMBS debt. There's going to be a big need for that. I want to remind everybody, if you missed something on today's episode, you can check out the replay on any of my socials, LinkedIn, Facebook, Twitch, or Instagram. Look for @JimFried or @FriedOnBusiness. Head on over to the @JimFried YouTube page, Apple Podcasts, Spotify, anywhere you listen to your audio. And please check out all of our past episodes as well. I want to thank Warren Henry for sponsoring us for the past 15 years. I want to thank the University of Florida Center for Business. University of Florida Bergstrom Center for Real Estate Studies. They're our sponsors. They'll be back on the show soon. I want to remind everybody, the person that wants to do something finds a way. The other finds an excuse. Now go out there and make it happen. God bless you, and God bless the United States of America. Miami Podcast Studios, the rest of the show is yours. Do your magic.